What's up everybody, Nate here, and FTX, one of the biggest players in the cryptocurrency game, just effectively went under, and now it's leaving one of its biggest competitors, Binance, to kind of pick up the pieces. Binance is going to acquire and basically liquidate all of FTX's holdings and now take control of the entire company on the global stage. And this affects more than just people investing on FTX or Binance. These are really big exchanges, and we have seen so far in 2022 and in parts of 2021, a lot of these crypto giants essentially go under. That has made the prices of Bitcoin and Ethereum and all of these other cryptocurrencies hit near record lows. And this might be a problem for years to come.
Actually, that's a big problem, Guy. It's a massive problem.
So what exactly is going on here? Well, to talk about the FTX and Binance situation, you kind of have to go back to at least 2020. The CEO of Binance was one of the first and biggest investors in FTX, but as of 2020, it started to see some trouble around the corner and started liquidating a lot of its holdings in FTX. Now, FTX, seeing that Binance was kind of liquidating a lot of its shares, well, it started to buy up all of its shares that Binance had previously owned. So now it once again owned all of its shares, and Binance didn't really own much. FTX cited some regulatory reasons for wanting to buy up all of its shares in Binance, saying that Binance couldn't own all of those shares without getting some government crackdowns. Now, that's actually not that big of a problem by itself, but it's what Binance was actually selling and what FTX was actually buying that created all of the problems. You see, a lot of these exchanges, not just unique to FTX or Binance, have their own in-house token. They basically take your money that you put on the exchange and they convert it into their own cryptocurrency that you can then use to buy and sell other cryptocurrencies on their market. Well, problems started arising with the FTT token that was being promoted and used by FTX. Binance announced just a few weeks ago that it was going to be liquidating and selling all of its FTT tokens, which amounts to around $2.1 billion. And because FTX is such a big company, a lot of other brands have started to put their money into FTT tokens, and it was revealed that another cryptocurrency exchange, Alameda, was actually investing billions into the FTT token. So as this liquidity crunch happened for FTX, now all of the holdings for Alameda actually started to drop too. Those tokens dropped in value because they suddenly became so illiquid. And because it was all controlled from another exchange and Alameda just kind of assumed FTX was going to continue to be really great, that's why they held their money there. Now all of that money was essentially becoming worthless. We're talking billions upon billions of dollars. And this is where things really start to get interesting, because Alameda actually said that their FTT holdings with FTX actually equaled around $6.1 billion, but FTX said that their total FTT holdings in general were only $5.1 billion. So who is right and who is wrong? Well, the problem is we don't really know who is right and who is wrong here. FTX is saying that there's only $5.1 billion worth of FTT coins in circulation, but other brands are saying that there's a lot more. So where exactly is FTX getting all of this money from? A lot of speculation is happening right now, but many people believe that FTX is starting to use its own users' reserve cash in order to buy more FTT coins and buy more crypto. That would essentially mean that the entire company is completely insolvent, because the only value and the only money that it has is from its own FTT token, which is basically worthless if the company goes under. And then they're now leveraging all of their own cryptocurrency users' money, which now if the platform goes under, those cryptocurrency users are going to lose everything. And in order to prop up the FTT coin and make it continue to be valuable for Binance and Alameda, FTX was continuing to use users' money in order to buy their own token, something that we have seen recently with other cryptocurrency exchanges in the United States. Once people essentially found out about this, well, now they started to sell their FTT tokens all together. Now all of those FTT tokens were becoming liquid all at once, and FTX was losing all of its value. Now all of the other cryptocurrencies that were being held on the platform, like Ethereum and Bitcoin and Dogecoin, were also starting to flop. flood as users left. All of that money left too, and all of the assets that FTX was holding suddenly disappeared. That created a wave and fallout for other companies as well, like Robinhood, an exchange that allows users to buy, trade, and hold crypto, also started to go down significantly. Coinbase also started to go down too, and a bunch of other exchanges fell in value because now people were starting to pull their money out of these crypto exchanges, not trusting the holders of their cash to begin with. Basically, from that point on, Binance kind of saw that FTX was struggling and decided to swoop in and buy their entire company. Now, we don't actually know how this is going to affect United States users because FTX.US is a completely separate company from its international counterparts, but this is not a good sign for the entire cryptocurrency market in general. What you've got to understand about decentralized money and cryptocurrency is it kind of works in two ways. You have cryptocurrency and then you have the actual exchanges. Now, the actual exchanges kind of function differently and separately than cryptocurrency in general. Crypto, in theory, doesn't really technically need an exchange. It doesn't really need anything to kind of prop it up. Crypto is its own separate entity. People can buy it, people can sell it, and there is actually P2P websites and individual exchanges that allow you to do that exact thing. So you don't necessarily need an exchange in order for all of your crypto to be sent out into the world. The exchanges make that process a whole lot easier. They take in your crypto, they hold onto it, and when you're ready to buy and sell it, they essentially send out the codes. The big problem is there's a lot of money wrapped up in crypto, but the value of cryptocurrency is constantly changing because it's such a volatile industry, and we have seen it go down pretty heavily in 2022. A lot of your cryptocurrency exchanges have also fallen, and the reason being is because they have their money wrapped up in crypto. And this is a trend that we're most likely going to continue to see into the future because a lot of these cryptocurrency exchanges and crypto in general is extremely unregulated, not only in the United States, but around the world. Cryptocurrency investors and users basically can use it for and do with it whatever they want. That means there's going to be a lot of scams. That means there's going to be a lot of situations where you have your exchanges and your people trying to prop up a specific coin and trying to game the system. Cryptocurrency at its core is valuable because people say it is valuable, and what these cryptocurrency exchanges kind of rely too heavily on is their own coin that they create. Now, when times are great and people are using your exchange like crazy, then it makes a lot of sense to have your own coin because every piece of cash that comes into your company has to be exchanged and turned into your own personal coin. That means that all of this value can then be spread across the entire planet, and you're basically starting your own brand new cryptocurrency, the likes that can battle with Bitcoin depending on how big it actually gets. But when times are not so good, then that coin is losing all of its value, and the problem is these cryptocurrency exchanges rely and leverage too much of their entire company on the value of their own coin, something that can be even more volatile than the entire cryptocurrency space to begin with. And now the big question is, what exactly is coming next for cryptocurrency? Well, cryptocurrency is going to continue to be volatile here in the United States and across the world for a variety of different reasons. The Federal Reserve right now is raising interest rates, which means it's really difficult for investors to put their money behind risky assets, i.e. crypto. And as long as interest rates stay high, there's going to be a lot less money circulating throughout our economy, and investors don't want to use their own money to invest in a risky asset. They want to take on debt and try to use that debt to amplify their earnings, but debt is becoming really expensive in the US and across the world because other central banks are also raising interest rates. That has led to the cryptocurrency market going down in general, and I know crypto enthusiasts don't like to hear the word regulation, but regulation is something that is going to have to come in order to stabilize the market in general. We can't have cryptocurrency running wild forever because that is going to create problems for everyone. There are going to be scams out there in every single market. There's going to be people that want to take advantage of others, and that is just the way the world works. But if you can have some sort of rules and regulation to catch these problems ahead of time and prevent them from happening in the future, now you can have a more sustainable market. Obviously, there's scams and other problems that happen in the stock market and real estate, but you don't really hear about those as much because those problems are a whole lot smaller and we're starting to delete them over time. Plus, the SEC and other regulators regulatory bodies catch these problems pretty quickly and then send out fines as they go. The same thing will happen with the cryptocurrency market, but it is extremely young and it's going to take a long time for our legislatures and governments around the world to figure this all out. In the meantime, crypto is going to be extremely volatile. It's going to go up and down depending on how much value it has on that particular day. And because it is something that is totally technology based and digital, it doesn't really have a lot of real world applications as of yet. In 2021, a lot of the businesses that formed, a lot of the startups that formed around cryptocurrency, well, they didn't really have a usable product, meaning it was just an idea. Now you have to create a solid company and a strong business model around cryptocurrency if you want it to be successful. You can't just have a coin and you can't just say that you're a cryptocurrency startup. And finally, if you want to put your money in cryptocurrency, then do so because you believe in the future of crypto. You believe in the technology as a commodity and as a unit of exchange. Don't just buy cryptocurrency because you think it's going to be something that's going to make you rich very quickly. If you do that for any asset, it's probably going to cost you more money than it actually makes you. And you always want to try to diversify all of your assets and your holdings in any single market. You don't want to try to just put all of your money into one single thing. Try to diversify your portfolio as much as possible with stocks and bonds and real estate and of course, crypto. Nobody knows exactly what is coming next for cryptocurrency and exchanges in the future, but I can guess their entire relationship is going to get a whole lot more complicated as the years go by. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel. I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.